President Trump posting an image suggesting he will be proposing 50-year mortgages, a move his federal housing director confirms they are indeed working on, promising to be a, quote, game changer. Here with what that could mean for you and your wallet, former Trump economic advisor Stephen Moore. So great to see you this morning, Stephen. So what would a 50-year mortgage even look like?
Great to be with you, Charlie. Well, I had just heard about this idea yesterday. I'm pondering it. Look, here's what would happen if you had these 50-year mortgages. Your monthly mortgage payment would go down, right, Charlie, because you're paying that mortgage over 50 years rather than, say, 20 or 30 years. So if you want to make housing more affordable in the very short term, that might be a good way to bring down monthly mortgage payments, but then you're going to pay for a long, long time. You're going to be paying that mortgage payment for most of your life. And so that's a question of whether it makes sense financially to people. Yeah. But right now, where people are really struggling to find a home where they can meet those mortgage payments, it might make sense for people. By the way, the federal government should also be issuing 50-year debt because interest rates are low. It'd be a way for us to lock in low interest rates so that if we had a huge spike in interest rates in the future, we wouldn't be in a real problem situation financially.
And so, of course, after 30 years, if you had a 50-year mortgage, after 30 years, the way banks structure loans, you probably still wouldn't own but about 10% actually own, but about 20% of your house.
That's a good point. That's a good point. You know, you want to build up equity in your home. That's why a lot of people, you know, when they have the financial means to do so, they speed up their mortgage payments. But listen, the problem with our housing situation right now really is so many restrictions on building multifamily homes in a lot of areas. By the way, I can tell you one city in America where housing prices are going to go way down. You know what city that is?
Where? What's that?
New York City, because everybody's going to move out.
Right, exactly.
So if you want to buy a house.
Yeah, he's just joking. Mandani just messed it all up for y'all. But yeah, the 50-year mortgage don't really make sense. Like, this is where a part where Trump, I don't agree with him with. Now, yes, you could afford a home now if you did a 50-year mortgage, but in the long term, you will be paying out more money. Does that make sense? You save $200 to $300 a month just to pay $50,000 to $100,000 more dollars on interest to own, and in that 30-year span, you only pay like 20%, 30% of your house. You know, because the interest is front loaded. You get what I'm saying? They don't really go off into the end. So is it really a good deal? I'm gonna have to say no. But for the meantime, I got another video for you just to play a little bit more because this guy actually breaks down the math. And since this guy breaks down the math, I really like this video. I want to actually react to this because I know it makes sense for you guys. And, you know, it's your boy AngeloSavage, and we got to make sure the numbers make sense if we are going to interpret anything. See, I'm not a yes man. I'm not going to agree on everything Trump does. So the 30-year mortgage, okay, that's something that we needed to do. I'm not even sure what they did prior to that. Did you need all the amount, you know, before President Roosevelt? But 50-year mortgage, you will never, you're going to die in that house. Maybe. Your kids might die now. 50-year mortgage, G? Come on. I will say there might be pros to it. I'll explain that after this video. Let's go.
50-year mortgages. That's like a real thing that they're going to launch here very, very soon. Trump just announced it, and I want to break down a 30-year mortgage for you and a 50-year mortgage for you because both of them have very high interest on the amount you pay. And would you even save any money with the 50-year mortgage, or is it just significantly worse? I'm going to break it down for you. All right, I got them both right here. I'm going to do a 6% rate. You guys can argue about rates in the comments. 6% just to make it even across the board. 30-year mortgage. Price, $500,000. Down payment, about 20% down, right? $100,000. Mortgage, the amount you're actually financing is $400,000. Payment, $2,400 a month. That does not include taxes and insurance. That's going to vary by state, okay?
Right.
Interest, you're going to pay $463,000 in interest over a 30-year loan. I think most people don't know that, but maybe a lot do. Total cost, $963,000. You take the actual initial price plus the amount of interest that you paid. That's not including taxes and insurance. $963,000. Is the 50-year worth doing? Okay, I got them side by side right here. $500,000 price, $100,000 down, $400,000 mortgage. $2,100 payment. $2,400 to $21. You're saving $300 a month. But how much in interest do you pay? $863,000 versus $463,000, meaning the total cost for this home, if you take $863 plus $500,000, is $1.36 million. The 30-year and 50-year mortgage.
Moments in Little Village and
I'll say this right now. Is that what y'all really want, huh? Is that what you want? Are you ready for this? Are you ready for this numbers? Based on this guy's numbers on a 6% interest rate, and that's really good. You'll be paying $400,000 more in interest for an extra 20 years. The bank's gonna love this. They're gonna be like, "Ooh, we coming up. Thank you, Trump." And now I'm not gonna say the people that does the loan might not benefit, because now you can afford a home. Because I'm be honest, an average person, just like a single person, they cannot afford a home. You need like a partner or something else, or you buy like a distressed home and build it up. But they can't just afford a home. It's just so high priced. And I'm in the Midwest, so we know that. But the problem is, it's like we got cheaper houses here than around the country. You know what I'm saying? We can find houses about 150, 190, while everybody else is finding cribs around like 350 to 400, which is crazy. And you can find a good little crib out here, you know, go to the burbs of Chicago and find you a really good spot too. You know, you can go to Aurora, you can possibly go to like further west, you know what I'm saying? Good areas, and really get a nice big house for like 200 for real. You know what I'm saying? And, you know, it's a good little area. Look, I'm going to say this. If you're smart, let's play devil's advocate instead. If, say you're a youngin' and you got a crib, in 50 years, that crib going to be way more than you paying for it, if that makes sense. So, yes, you might have to pay $400,000 more in interest over the next 20 years, or the last 20 years of the loan, say, for instance. But that's 50 years of growth. That mean that house ain't worth 500 no more. It's worth 1.5. You get what I'm saying? So you do get your interest back, but you get what I'm saying, based on the growth of the economy. In 50 years, a $500,000 house probably should be worth, like, in 50 years. Imagine a house your parents lived at 50 years ago. It was probably worth nothing. But right now it's probably worth 400 to 500,000. So in 50 years, and that was probably a 30-year loan. So in 50 years, your house will go from $500K, and this is estimate, to about 1.1, 1.2, 1.3 million for real. That's reasonable as hell. So I will say, by the end of time that you pay that 50-year off, your house will be worth the amount of money that you paid for that 50 years, if that makes sense. So you kind of get your interest back because you paid that, really because you waited so long. I mean, like, you had the home so long. Hopefully you don't lose it. But I will say the price will be different. But they said it's only going to be like a $300 difference. So is it really worth it for a $300 difference? Not really. You would have to change the interest rates and the taxes of whatever city that you're living in, because that differs too. And that's why you need to pick where you go. And then taxes forever. That's why I'm moving to Florida. Ron DeSantis said he's taking the property tax off. That means when you own the house, you own the house. That's what I want to hear. So if y'all think it's a good decision to do a 50-year over 30-year, I don't know. Based on these numbers, it wouldn't make sense. And so maybe, you know, Donald Trump is just throwing out one of those ideas he throws out, of course. We'll listen to it, but I don't think this might be the best idea. If you're trying to get a crib, maybe, I guess, maybe your availability now, you can afford more home because it's extended, possibly. So now you're like, oh, how much can you get approved for more home because it's extended? So possibly, if you just want the concept of owning a crib at the time, because that's really what it's about, you know, assuming that you're going to live that long, because the average live rate is like, 89 for women, 87 for men type shit. So it's like, if you don't buy this crib by like 37, it's a dub for you, G. And then you're supposed to retire at 67. So can you still afford to have this home? You know what I'm saying? I don't know. Y'all let me know that in the comment section. It's your boy AngeloSavage. Tell me what y'all think in the comment. And don't forget to subscribe. It's your boy Savage. Let's go. Peace.